Hey everybody, welcome back. I am joined with an amazing entrepreneur to dive into some wonderful conversations around entrepreneurship. I don't even want to spend a lot of time introducing the show today because we have what is I think going to be a jam-packed opportunity here. Dan Martell, author, entrepreneur, coach. You're doing so many things in the space. Thank you for joining us here.
Dude, it's an honor. This is fun, man. You talk about stuff that I don't get to talk about often.
Yeah, I think
dive in.
That's the exciting thing about startups, about entrepreneurship, is that there's so many ways that you can take it. And as somebody that actively angel invests, sees 50 to 100 deals a month, and is constantly working with an investment network, I maybe come with a different perspective than what you're traditionally used to.
100%.
And so we're here in the hub at Office Logic here in Miami, Florida. I know you're here for a different conference.
Yeah.
Excited to
I'm actually speaking at Tony Robbins.
Nice.
Yeah.
What's that conversation going to be focused about?
AI. Yeah, really. So I wrote a book called Buy Back Your Time, that blue book. But essentially, I believe in there's 4 core concepts to get leverage, right? There's content, creating SOPs, scaling systems. The other one is capital, right? Capital gets crazy leverage, takes money to scale money. Code, which is software. AI would be the ultimate form of code, and then collaboration, so the people side of things. So that book specifically spoke to kind of leadership, people, but I'm a technology entrepreneur, so the code side of things, the AI side of things, is actually what people seek me out for.
Right. And so I think that I want to dive right into it and just get into the meat. And so you're known for building your coaching program, and a lot of the stuff that I've seen from a lot of your content focuses around SaaS businesses, subscription as a service, which traditionally is a very attractive business model because that's building recurring revenue, which allows you to more easily project how that company is going to perform moving forward. It allows you to apply evaluations and comparable metrics and those types of things from a fundraising perspective. But then, of course, from a running a business perspective, it's also nice to have recurring revenue because it doesn't require additional manpower to get that capital each month. You're kind of locking those people in.
Yeah, it's like an annuity.
Right. You measure that churn and you try to lower that as best as you can. But realistically, most of your customers are probably going to keep going every month. That being said, it seems like the market, at least in some of the Silicon Valley startups, which tends to trickle into the general startup ecosystem, may feel that business model can be a little bit tired for businesses that don't necessarily need it. Because everybody doesn't want necessarily 1,000 different annuity payments that they have to make each month to all of their different services.
Yeah.
That kind of rent-to-own style of model can wear you down if you've got 20 different products that you're using. So I wanted to really take a few minutes here and start to talk about what is the value of SaaS in the current market? What does that look like moving forward? And what are your thoughts on that kind of general topic?
Yeah, so everything comes down to lifetime value of a customer, right? The reason why software companies are more valuable is because if they do it right, the longer a customer base, a cohort of customers stick around, if you have what's called expansion revenue, then they're worth more money over time. So if you take that concept and say, well, how do you increase your expansion revenue or lifetime value? It really comes down to, yes, the features have to be there to support that. But for me, it's about pricing, right? I call it the strategic P3, packaging, pricing, in your plans. The pricing side in the old days, prior to software being SaaS, software as a service where it was hosted, we used to have to buy it as a license and then install it on servers, and then you pay usually 20% kind of support fee every year to get the latest version or call somebody if something goes wrong. It's kind of funny because we're seeing this trend. I think 37 Signals, so DHH, who's one of the founders there, they're the founders of Basecamp and a bunch of other tools. They're actually making a bet to go back that way, where they're like, hey, this death by subscription for a lot of business owners, this is dumb. We're going to let you pay $500 one-time fee. You install it on your own servers. Well, now that we've got the internet, we can connect it to our system. If there's updates, we'll push the updates. But we don't need to incur the cost of hosting anymore, and you don't need to pay for it every month. Pay a one-time fee, and there's that. The other side of it is, and this has been around in software for a while, for few companies that could pull it off, which is success fees, which means that based on how well we do our job, then you will take a percentage of it. So it's not a subscription per seat per se, or per email sent or whatever, what's called a value metric. It's predominantly based on how well we do, right? The hard part about selling it that way is that it only works if the customer knows whatever you're measuring. So my friend that has a FlexPay, their coaching client, they essentially get paid based on the amount of money they collect from credit cards not charging, right? So like most credit cards, they're not fraud. There's nothing wrong with them. They just don't process. It's about 12 to 13% of like Netflix's monthly bills falls into this percentage of accounts or cards that don't transact. So what they say is like, we don't charge you, per like the volume of transactions or a monthly fee. We're just going to charge you based on the amount that we collect above your baseline. So that's a success fee. And we're seeing that happen more and more. And the reason why is that it really does capture the value you're creating, right? Whereas everything else, it's like per seat. And then companies will say, well, you got to buy a minimum 100 seats. Well, we'll have a team of 60. Yeah, but eventually you're going to grow. So like a lot of companies are just getting sick of the death by 100 SaaS bills every month. And honestly, like if anybody uses like a product like HubSpot, which is a great company, I've never seen a company, Zoom would be in that category, that have optimized their pricing. Okay, because there's 4 different ways to optimize pricing, and a value metric with add-ons and hubs. Like they have, you start with the free CRM, and all of a sudden you wake up and you're 20 grand a year in fees, and now they're doing quarterly billing, which is another thing. Like, I think we're going to see a trend towards that, but the valuations were high like for a while till about 18 months ago, because I actually closed on a deal yesterday. So we buy about a company a month, okay, about 12 to 15 million enterprise value, and we used to see valuations like 12 times, like not even EBITDA, just top line, like 10x top line ARR, and I'm like, but the economics didn't make sense because the fundamentals of the business still have to be there. You still have to have expansion revenue or net negative retention. So like that, the new pricing will work, but not for everybody, because it requires the customer to understand that pricing. Like if I say that you're going to pay me a percentage of your data transfer for website or video hosting, well, you don't know what it currently is. So how can I take a piece or charge you for that if I don't know what it is? And a confused mind never buys. Like that's rule number one. So if your pricing confuses the customer, they won't buy. Have you ever looked and I was an investor, but Intercom for a long time, you couldn't figure out like, what am I buying? And they had this like configuration wizard, and it's like click, and it's like, okay, well, what if I do this, and this, I need it for this. So I think that's the general rule, is that success fees are easier to understand if you understand the current baseline of the data.
So that's a really interesting point around better understanding the value of the companies that are being created and having more accurate KPIs to determine what the valuation of this business might be for acquisition. How is that being impacted with AI? And how I think there's almost two sides to this coin, and I want to hear which side you find more compelling. Because I think that on the venture side, when I see a lot of these deals, there's a lot of criticism that many of these businesses are just basically GPT wrappers or something like that are leveraging the API to accomplish some things, but it's not actually innovating in any particular way. That being said, it may still be generating significant cash flow. Perhaps it's powered from the individual's brand and what they can do as a solopreneur. You look at Greg Eisenberg and what he's been able to do with solopreneurship and so many others. But then there's also potentially an angle of it actually solving a real problem, despite the fact of how it's actually getting done. If it's generating cash flow, it's generating cash flow. So where do you see the AI piece being layered in? Or is that an opportunity to acquire cash flowing businesses with cheaper overhead, or is it something that's not very defensible and is hard to really bet on?
My perspective is it's tough to... It's like when we used to talk about Bitcoin, it's like, are you talking about the currency or the blockchain? But they use the same word.
Sure.
And based on that context, it changes the frame of what we're talking about. And I think AI falls in the same thing. As people say we're an AI company, it's like, but is it your large language model? Is it your LLM? Or is it, like you said, ChatGPT or OpenAI or BART? I think that every company will eventually have AI to support its workflows, right? If you think about it, it's like, it doesn't matter if it's an ad writer or a video analyzer, whatever. There's the workflow that the customer has a pain around that they're paying you to solve. And then there's the underlying technology. So the problem is that right now they're calling it the same thing. It's an AI company. No, it's a difference. It's like, are you leveraging AI in your platform, or are you a native AI, like hardcore data scientist built like FlexPay, who does the credit card transaction stuff? They have their own data scientists. They're building their own models. Like it's their own technology and it's real science. Where I see an even bigger problem is the amount of money being raised for AI companies that are essentially not funding innovation. They're funding hardware. So when you see these $100 million rounds of these new AI companies, 80% of that capital is going to NVIDIA.
Right, buying more graphics cards.
buying the hardware to power the training machines and like the LLM. So I think that like if every company has to like when you're talking about it, you got to figure out like which one of these are you, right? And I think that the valuations, if you can build something defensible, I mean, that's always what it's been. It doesn't matter if you're, Slack, Dropbox, Airbnb, there's a moat to be created. And to the degree that you can build something that's competitive and differentiated and unique that you own, and you can build that moat, even if it looks like a feature initially, because in tech, that's what everybody says, oh, that's just a feature. It's just a feature today, but if you can move quickly and build a distribution channel, then it becomes a company, then it becomes defensible, then it becomes the category king, and nobody can mention place number 2 or 3. Like nobody's gonna mention a new messaging platform without mentioning Slack. Then they're gonna get the momentum from it. And I mean, for a long time, all these web companies were just databases with front end interfaces. Yeah, right. So there was no real innovation. I think that's still part of it, but it's really about who owns the customer and how differentiated your solution is. Because like my favorite term for revenue in SaaS is durable. But to make it durable revenue, you can't have 10% monthly churn. You can't have single base pricing. If you don't have a structure where the more you scale, the more value you capture, then it's not durable. Because it'll eventually like somebody else, or if you're like Martech is so susceptible to like click, move. Right? Like if it's not sticky as a product. So I think AI, it all depends on like which one of those models are you using. But the ones that are actually building their own kind of models, even if they leverage other AIs to do different pieces, I just think like at the end of the day, it's like, a database. Like, do you have a database as a company? You better.
Right.
Like we're not debating that. Do you use mobile? Yeah, you know what I mean? Like, yes, we're not debating that. Like, right. I think that AI is just going to be part of infrastructure that every company uses.
So that's an interesting point. I think that there's almost 2 directions that I want to go with this conversation. We'll start with the first one, and that is you talk about acquiring companies. Mm-hmm. And so we've now discussed 2 potential new red flags in the 2024 landscape in terms of navigating AI companies that maybe aren't actually leveraging their own proprietary technology, and the fact that that isn't necessarily durable revenue potentially. No. Then you also have this ongoing discussion around pricing strategy and what fits best for startups, and how potentially larger scale enterprise companies have more flexibility in terms of pivoting to a more usage style of monetization because they have reached that scale. They have much more information and insight into their customers. Whereas a smaller business, likely one that you're more interested in observing from an acquisition perspective, maybe doesn't have those same resources. So you have to weigh the value of maybe a business model that's less preferred by the customer, as well as potentially some of these AI tools that are laid in there that may or may not actually be a durable business model. Yeah. Then there's the elephant in the room of the other side of the coin. I'm incredibly bullish around AI. If they're not leveraging AI and some of these new software innovations, potentially their business models also in jeopardy if a platform comes in with auto-executing code that essentially does their business better than they do. So how are you navigating that space? What are you seeing in terms of trends that are interesting to you in terms of businesses that you'd look at from an acquisition or an investment perspective?
Yeah, I mean, I buy boring companies. So like our software companies that we purchase are, 17 years old, 15 years old, they have a niche, the product works, the customers love them. The cash flow is predictable. I mean, I think in any business as an investor, I'll speak to SaaS, you're buying discounted cash flow. Like that's it. You're like, you run the numbers, you look at like, what's the value there? We have our own capital, but we're not using leverage. But if we did, I mean, that's how all acquisitions in the past have worked for the most part. Maybe there's some value add. Maybe there's, a platform play. A lot of PE, private equity firms do that where they'll buy, 5 or 6 companies and bolt on. But I think, if you buy one of those companies and they don't currently have AI integrated or some component of it, you have to have a roadmap. I mean, 36 months, 18 months preferably, where you're looking at each feature and saying, like this thing that the client's doing could be done automatically, right? Like routing or analysis. I mean, it's even basic stuff like data cleanup, right? Like we have a feature where every time somebody submits a form, the phone number needs to be formatted in a proper phone format with the country code. Now, you can hire somebody to go in there and clean up the data or hope the person enters it in right or fix the form, or you could just throw it over to AI and say, send it back done. Right. And it comes back done. And you add it, and all of a sudden now the dialing tool works 100% of the time. So I think there's these use cases where the solution has been hard-coded or we put the heavy lifting on the customer. And we need to ask ourselves, is this something we can fix with AI? Now, the key is, so that would be like level one, like integration of AI and trying to fortify your business. But I would then say, like, how does this whole thing get disrupted? To your point, right? It's like, if somebody wanted to start with first principles from scratch with what's available today, how would they disrupt my business model? And that is where all the CEOs, all the entrepreneurs, that's what I'm going to speak on at Tony Robbins is, how do we think about it from a disruptive point of view? Because you can incrementally make your product better using AI. And I think if you're not, you're just going to be, there's two types of companies going to win. Companies that incorporate AI and the ones that don't, right? And the ones that do will be around in 5 years. But the valuation is worth considering. It's like, if we had to ask ourselves, first principles, like how could we disrupt this whole solution? Because that's all it is, right? People buy products to save them money or make them money. So it's like save them time is make money. But like, what would we do? Could AI do that? Maybe it's not there today. Like a lot of stuff I talk about is like generative video, generative voice. Like you think of just like content creation. A lot of people go into the studio and they reshoot the course. It's like you wait 18 months. You don't have to do that.
Right.
You can literally take your old course, take the transcript with generative video.
Yeah, just deep fake it for the next
and for yourself. So you never, and then you're like, oh, I don't like the way I say this, or I mentioned this tool that's not relevant anymore. It's just like edit it out, right? Regenerate it.
Have a constant living course.
Yeah. Oh, and by the way, let's translate it into every language in the world and now start selling it in those countries. Oh, by the way, we're a world-class expert at this topic. How about we license our IP to another person that then creates the same videos in their cloning software. So all of a sudden now they're a SaaS expert or a finance expert or whatever, and it's a product they sell to their community. Like if you just look at like whatever you're doing today, right? One of my companies is the largest coaching organization for software founders. When we look at the future, we have to ask ourselves like, what will always be true? Because the stuff that won't always be true, like as a coach, analyzing the business, looking at it and sequencing is what we do. Right? We know how to look at companies through a lens. It's how you look at investments. It's like we have a way we look at companies that's different. And once we analyze it, we can provide prescriptions. That is 100% going to be done by AI in the future. And companies that think that they're going to still be coaching on that level, I mean, they're going to get blindsided. But then it's like, okay, what's still true if that happens? Well, the truth is there's still this, the wetware of the brain and the human and their emotions that are going to stop them from taking stuff because we all know what we got to do. We just don't do it.
Sure.
And then I always say, well, even that's up for disruption as soon as Neuralink is done. Like as soon as you can like hardwire your brain into the compute power of AI and you can tell it to start solving deep trauma, deep story, deep emotions, deep bad habits, even that's up for discussion. I mean, that gets closer to singularity. But I mean, I just think that there needs to be some real assumptions on like where you create value in your market and how AI could be integrated and or disrupt you, and decide, do you want to be Blockbuster or you want to be Netflix?
It's a great point. And talking about AI and some of the more, I would say, Black Mirror-y style of things that maybe some people feel dystopian about the AI systems. I mean, I was just reading about some of the new research around, they don't even need to have invasive technology for brain scans anymore. I don't know if you saw this from, I think it was last week or 2 weeks ago. There's a cap that you put on that just scans your brain waves.
Yeah.
And they were testing with individuals where if you were to think of one verb, just walk, run, jump, it was able to detect with a 40% accuracy which word you were thinking about, right? So and that's the first iteration. You think about what 2, 3, 4 years looks like. It's very, very different, and you're going to get very close to that ability to really just read the mind, even potentially without surgery or without implanted diodes or neural meshes like we see with some of these early hardware, brain meshing concepts. But I think that takes us to an interesting question, and I want to hear where you feel, because there's an ongoing debate right now, and this stems from, I guess, technology from the last 20 years of open source versus closed source. We've seen the value of both, right? Closed source allows for, capital to flow into those products because it's defensible IP, which allows for accelerants for, you look at OpenAI, they wouldn't have been able to get ChatGPT to where it is without raising a boatload of money for servers, for training, for all these different components. That's honestly what caused the Elon's fallout, was because it was originally structured as a nonprofit, but they couldn't get enough donations to actually build the product that they wanted. They had to raise additional capital. So there's a lot of value in closed source from that regard. Then there's a lot of value in open source. You look at cryptocurrency and the blockchain industry, a lot of the innovations that have come from rebuilding the financial applications, whether it's lending, whether it's permissionless transfer, a lot of these types of things, regardless how you feel about the speculation, some of the, at least developments with stablecoins and international payments are pretty interesting, and were only accomplished by having large groups of people working together on those tools in a collective environment. So there's this ongoing rage between, should AI be closed source or open source? And then you layer in the fact that you can't really control AI. So if it's open source and you develop something that's potentially dangerous, how is that regulated or prevented if something gets out and then it gets into a bad actor's hands? So I could go on and on about some of these different factors. Where do you fall in that discussion and in that debate?
It's a great question, man. I mean, I grew up in open source technology like Linux and PHP and a bunch of other, programming languages. I value the benefit as a capitalist. Like, I'm 100% a capitalist. I've been on the other side of it where, companies I've invested in had to defend themselves against patent trolls. So that's a pain in the butt. And I think there's a balance, and I know that's why it's regulated and there's a legal infrastructure, and we need to make sure that we don't block innovation but at the same time don't allow people to just steal your stuff if you've invested all this time, energy, and focus to create something. It's an interesting one because I think there's a responsibility. I think the government has a place, right? Like, think about like cars and seatbelts. Like, we need the government to be involved in certain things. If it left up to everybody, especially as societies grow, there needs to be some oversight. The fact that there isn't on open source, considering how powerful it is, actually fascinates me. And I know that Elon shared that several times about like you said, he created OpenAI as almost like a defense against any national state acquiring this technology because he understood how powerful it was.
Next thing you know, Microsoft is a
their primary investor, and it's like, we have this corporate structure with the nonprofit and the for-profit, and it's like nobody could understand it,
right? Not to mention all the governance issues that they've had.
Obviously, I don't know where I sit on it, because obviously I think both are important. I haven't spent enough time thinking about at what level should this be governed, or like where would that stack of like, hey, some things should be open source, other things should be proprietary and built in closed box systems. Because it also, like, I mean, if you just look at, there's different examples of like a Samsung versus an Apple product, right? But I haven't spent a lot of time on it.
I didn't mean to put you on the spot there, but it's
no. I mean, it's one of those things where I've thought about it, but I haven't actually like figured out what's my quadrant around it.
The way I look at it is that, my background is in tokenized assets, so bringing equities, real estate, debt, those types of products on chain, which allows for automation.
It removes the transaction coordination.
Exactly right.
All these
look at
industries,
GameStop or whatever, right? That doesn't happen if we can locate the securities immediately because it's available on chain, right?
Yeah.
So a lot of this stuff can be improved. We're seeing, especially with stablecoin adoption, is tremendous. I've I've dealt with a lot of international companies, whether there's investment vehicles or any kinds of transactions where using USDC is way more preferable than using a wire transfer or a bank transfer, just because international bank transfers can be really complicated.
Dude, it's ridiculous.
Yeah. And so there's a lot of value there. I think that what we've seen internationally that's worked really well, like especially you look at the Monetary Authority of Singapore, which is the MAS, which is the SEC for Singapore. They built a regulatory sandbox that allowed all of these licensed institutions to build products under the oversight in this kind of testing environment where the regulators and the entrepreneurs kind of build this thing together.
Yeah.
And then eventually you graduate out of the sandbox with a license to move forward with your technology.
Would they be, in your mind, be the most kind of forward-thinking geography around this?
I've seen it to be, I think that that's true. I do.
Yeah.
I think that they've been very intentional.
Yeah.
And so the reason I bring up that analogy is I think that something like that would apply very well to AI.
Yeah.
But also I think it's the counter argument for that is I don't think that it makes a lot of sense to try to regulate this type of thing if you don't build some sort of sandbox that allows for the innovation to start being developed.
Yeah.
Because you look at a place like Europe and they are very pro-regulation.
Yeah.
They love to come
They just
out with
like
regulation
shut it down. They don't,
before the innovation happens, which then just also drives it to other places and consistently holds Europe back in terms of
innovation and being leaders.
Whether it's their tax codes, which make it very difficult for startups to project future revenue. They have to pay taxes on future projected revenue today, which is obviously a huge hindrance.
Yeah.
And then you get a lot of these types of regulations that require so much development before the product is actually live. So, the way that I look at it is if regulators want to keep a closer eye on some of this stuff, potentially having some sort of environment where it can be built in a joint environment with much less pressure, that's almost a testing environment that everyone has visibility into to see the power of these tools so that we can make educated opinions.
There's more transparency.
Makes more sense to me than them trying to govern from afar.
And everybody under the same guidelines.
Right. Especially when you look at the Facebook trial when the regulators didn't have a pretty even clear idea of how Facebook makes money,
works,
let alone some of the more important conversations. So some of that stuff I think makes sense to me. So moving forward, let's talk a little bit about the Buying Back Your Time book.
Yeah.
So this was just published. You're now going on, for anybody in the camera, you're working with a lot of different startups on this space. Could you tell us a little bit more about the thesis of that and where your focus is?
Yeah, I mean, so I started writing code when I was 17, failed a couple times. When I was 24, hired a business coach, an E-Myth coach. A lot of people have read Michael Gerber's book, The E-Myth, The Entrepreneurial Myth. And the whole story is about Sarah's Pies and how she is a baker and she doesn't really know how to be, the difference between, working in the business versus on the business. It spoke to me so much. And as a software guy, I went all in on creating SOPs. I call them playbooks. Back then we used Wiki. I think we started with Confluence from Atlassian. Over the years, it's kind of morphed into now I'm an investor in Trainual. So there's dedicated tools to this stuff, but I've been doing this for 20 years. And it became the foundation of how I've scaled companies, called the buyback principle. And it states that we don't hire people to grow our business. We hire people to buy back our time. And if you actually look at the most successful entrepreneurs out there, that's what they do. I lived in San Francisco for a long time, built 2 venture-backed companies there. And when I, would talk to Naval Ravikant was an early kind of mentor from afar about leverage, or Keith Raboy, who's another incredible investor.
Yeah, congrats to Keith.
Going back. Ventures. Yeah, I saw they went back there. But I remember talking to Keith about this in 2008 about what makes the best entrepreneurs, right? Because he came from PayPal and he's seen all these other companies, and they're just able to curate a high amount of IQ per square foot. Well, the way you do that is by buying back your time. So the way you scale to 5,000 employees in 4 years is to the degree that you can build your management bandwidth. Most entrepreneurs are stuck doing the work, and they don't look at their value of their time and then how do they properly buy it back. So the book, it was really the movement I'm trying to create in the world is how do I help entrepreneurs build companies that don't grow to hate. I don't know if you have friends like this, but They end up building something for 4 or 5 years. They get a dozen employees, about $1.5 million in revenue, and they hate it because they're waking up every day trying to keep all the plates spinning, all the people busy.
It can be stressful.
Yeah, and it's just like they don't see a way out. They go, if you like, I always ask people, if you tripled your business next month, what would break? That's literally the priority. It's like if your fulfillment would break, you got to fix that, but you got to do that by buying back the time in your calendar where it's taking up doing whatever. It doesn't matter. Literally, last night I was talking to an entrepreneur, they're probably 15 million in revenue. And I said, like, show me your calendar. And it's like sales, innovation, all that stuff. I go, great. If you want to triple, he's like, I want to triple my business next 2 years. I was like, fine. How do you stop doing those things?
Right, leave those meetings.
You have to leave the meetings. You have to hire the leaders. You have to build an infrastructure. Like, most people don't realize that there's 2 growth engines of building a company, the customer engine and the team engine. And to the degree that you have a talent acquisition, talent development, talent retention program, then you can scale your company. None of that happens if you don't buy back your time. So that was the premise. But I'm a systems guy, so I go super deep on like the first hire being your executive assistant, how to manage them, the daily meeting, the way you set up your emails, get out of your calendar, get out of your inbox, work through the replacement ladder of like what hires you should do in what sequence, how to evaluate your time, like the buyback formula, and really like, okay, if we get that right, what are we doing this for? What's the vision? How do we even think about the future? Because I always say it's like the goal of an entrepreneur is to build the machine that builds the machine. Like, we're building this business to generate revenue. But at a certain point, like even with you and your investments, your family office, like now you're building the team to evaluate the opportunities to invest in the companies. And those are the machines that they're going to produce returns, but you have your machine up here that's managing a portfolio now. That's a completely different mindset and strategy that most entrepreneurs never get exposed to.
Right. That's a really interesting perspective.
Yeah.
So, all right, just to close out the show here, whenever I talk to people that are deep into the weeds, that are clear subject matter experts, that are making significant impacts in and across really exciting industries such as yourself, I want to take this a little off script. I want a hot take of something that you think that people aren't talking about right now, or something that you think is very counterculture to what the traditional opinion looks like today, and where you're seeing things moving forward into 2024. So do you have anything right now that's on your mind that you see people talking about that just doesn't make sense to you or doesn't line up with your view on how things are going, and where does that lie? Where's the alpha?
I think it's not in the investing, but it's in the person. And I think as it pertains to social media, people keep creating content to educate, and I don't think that's what builds trust. And people don't buy from people because of like the features or whatever they're selling. They buy because they trust the individual. So think about this. It's like, the argument about having a brand on social media, it's done. Like, if you're literally today telling me that people aren't addicted and watching their phones, almost crashing into themselves on the highway, and you're telling me you don't want to invest in your personal brand, that's an IQ test. Like, that's you deciding to be left behind. Because at the end of the day, every person's dreams and goals are going to sit on the other side of reach and reputation. Now, what does reputation mean? Reputation is building trust. And I think the thing that most people, I call it the transformation versus the tactics. Most people in content world sharing on social media, they're talking tactics, they're talking scripts, they're talking blueprints. And I teach that stuff. But what is going to enamor and create engagement in your followers is the transformation. It's where you were, what did you used to believe, what did you learn, how did you shift it, and now how do you apply that to today? If people actually created content around their own personal transformation, I'm talking everybody, investors, entrepreneurs, everybody.
It's a level of vulnerability.
And that's what's missing. So everybody wants to talk about like education-based marketing and the tactics, and I get that. How-to videos and search index, and YouTube's the biggest search engine in the world. What I've learned, and I've got a pretty massive audience on social media, is the content will go viral when you are authentic about your journey. And that is the big, like when you look at, we're living in a day for the first time ever right now with YouTube Shorts, the YouTube algorithm, TikTok algorithm, Instagram algorithm, that if you create something that has high click-through rates and retention, those are like, there's 3 core metrics, but those are the first 2 you got to focus on: click-through and average view duration. If you can create content that does that, you will get distribution. You could have 0 followers today, starting from scratch, and build a massive audience if you accomplish that, but you're not going to do it sharing tactics. You're going to do it by telling stories that emote feelings from people. And like you said, hot take, it's like, what do you believe in? You know, Peter Thiel talks about this. Like, what's a belief you have that other people wouldn't agree with? That's literally what you should be talking about. That will create virality. That will create audience. It'll create reputation and reach. And that's how we accomplish what we want to accomplish in the world.
So for someone that takes that to heart, that sees the opportunity, that has a unique perspective on a variety of different industries, I've heard from founders and from individuals that maybe are a little camera shy or aren't quite as sure about where to fit in here. It's a little overwhelming with respect to the fact that there are so many channels. And the key to social media, the key to getting the reach online is consistency, right? So I think that there is a trap where you try to feel like you need to hit every single channel, and then being consistent on every channel now talks about 3 or 4 hours each day that you're just trying to maintain all of these different channels. So what is your advice to somebody about building a funnel to be able to have a consistent content strategy, to then be able to convert leads from that content as you get distribution, to convert them into your business and
100%.
Then scale that?
I analyze it. It's my world. I have a whole team dedicated to it.
What's the MVP of where you are today?
MVP is Instagram, and I'll tell you why. Even the CEO of Instagram about 19 months ago, said the messaging platform was so used, like out of posts and stories and highlights, like the messaging, the chat on Instagram was the highest used feature, that he took people in his engineering team and reallocated them to messaging. Wow. That's why the Instagram messaging platform, if you actually look at it, is better than iMessage, is better than TikToks. YouTube doesn't even exist. It's literally, so if I can't converse with my audience, right? Even like Facebook Messenger, even though they're both owned by Meta, it's not a great platform. So I'd say Instagram, because it's got enough of an audience distribution. It doesn't matter if you're a freaking scientist, data scientist, they're on Instagram. It doesn't matter if you're a fitness coach, they're on Instagram. So like that is the best platform. And then the key though is the content. So here's my framework for that. First off, frustrations. List all of the frustrations your ideal customers are having. Doesn't matter if it's payment issues, like whatever area you're in, right? Blockchain, compliance, etc. Then you got to look at the fix. What do you have that actually solves that? Okay. And then you have to talk about the feelings. When did you experience that frustration? What was your transformation? How did you apply the fix, and what has that done to your life? And when people are like, I don't have the time to do it, I'm talking about one post a day. Right? Now, what'll happen is it's going to require you to be consistent. It's going to require you to have habits. It's going to require you to be a person that says they're going to do what you do, which I think are all great character traits. So what I love about this strategy is that it forces you to actually become a better person. Because did you know this, man? The rule number one of being successful is just being disciplined and showing up and having the habits. Yeah, exactly. So I love that social media, if you set it up right, will actually be a transformation tool for you. More so than only for your audience. Sometimes when I'm posting stuff, I'm like, who's winning here? Right. Like, is it the people because I shared this thing, or is it me because I'm now having to be accountable to what I just shared? I can't make a public declaration that I'm going to the gym every day and then decide on Sunday I ain't going, right? Or it's like, hey, this is a thing I always do this. And I always tell people, just share your path. Whatever has worked for you, like it doesn't matter if it's good or bad, it's just worked for you. And your strategies are different than mine and don't matter. There's 1,000 ways to be successful in your area of expertise. Just share it. And Instagram to me is one of the best platforms because the messaging is so great and people are there to both be entertained and do business. And then the video of that content can be reused in other platforms.
Right. That's I think really, really great insight and valuable to share. And as somebody that I certainly create a lot of content, I do mostly long form. I do news shows with on the blockchain industry. We do some great podcasts and a lot of that type of long form media. The short form media has been always something that I think is difficult. The hot take that I have is I wonder how the AI tools that everyone's using to edit all of their clips may actually go out of vogue because everyone will kind of have the same template and style.
I have a team of timestampers that this is what they do. Sam runs a whole team. We've got 3 guys that just look at content. We've used the tools. They aren't there yet. They miss the nuance. Right. So there's the clip and then there's the structure of the reel, and you need somebody that has an emotional edit ability to go, you know what? The way Dan or whoever said this, really, if they put this here first to do the hook. So the AI tools I haven't seen one that's done it. They'll analyze. And they don't know how to change it around. So if anybody looks at my reels, like they're edited in the format of what needed to happen, because I might have ended with the hook. I should have started, but I'm just human. I'm answering questions.
Sure.
Like I'm not, there's no, you ask me a question, I answer it. And I think that eventually the tools will do that. But what will need to be there is the story, is the feeling, is the frustration. Like you got to meet the market where they're at. I call it the chocolate broccoli, right? Like you got to give them what they want. And then once they come into your world, you deliver what they need. That's the broccoli. But if you lead with broccoli, which a lot of people do with information and how-to videos, it's like, you're like about.com. You're not interesting. There's no personality. Every person you follow on social media is a character that has a unique opinion that in some part of your life, either you admire, agree with, or disagree with violently, but you still want to be exposed to it in case maybe there's a blind spot.
Interesting.
But they're not being vanilla. That's 100% the case. And I think everybody's actually not vanilla. Like that's the fun part. I think
controversy sells, right?
And I think everybody has an opinion that is crazy and wacky. And if they just allowed themselves to share it, it would go viral. And then they could honestly show up every day more authentically who they are.
Right. That's fascinating. I think it makes total sense. So we got to wrap up here. This has been a wonderful conversation.
Yeah, I appreciate it. It's awesome.
I mean, welcome to Miami. I'm sure you've been here before, but the tech scene here, we're moving at a speed where every year it seems like there's new things coming out. There's a stronger community. I've been somebody that's been here since 2015, building technology here, building startups here, very ingrained in the community. So we're happy to have you and really appreciate you sitting down here. For people that maybe are in overlooked communities, which Miami, I think, gets a lot of PR, but the people that are building here often feel like they're still overlooked because there's not much investment capital here. There's still, developers are coming slowly, but there's the talent here is still, I think, building its community. But there are, of course, thousands of pockets of communities that potentially feel even that to an extremely larger degree. What would be your perspective for them in terms of how to build their brand, how to get access into, building cool companies and staying, I think, relevant in this space?
I mean, I grew up in Eastern Canada building software, and there was none of this. There was no community, no capital, no nothing. And a few things occurred to me because I built a company, didn't know how, had one mentor. Luckily, it was enough, but I spent a lot of time on planes, New York quite a bit, down the East Coast, selling to pharma companies. And then I moved to Silicon Valley. So I had this contrast of 100,000 person East Coast on the ocean, kind of above Maine. That's where I grew up in Canada. And then Silicon Valley. And what I realized there is a few things. One, the media actually drives a lot of awareness of things. And the cool part is every personal brand from Paul Graham, they all had their own, TechCrunch was a media outlet, right? There was all these blogs that were created and individuals that had brands, a Smart Bear in Austin, Jason Cohen, these are, Jason Fried from 37 Signal in Chicago. So once I saw essentially how the entrepreneurial ecosystem worked in the Valley, that your currency were your relationships, and for you to have stronger relationships, producing content, for the most part back then, it was, blog and then Twitter, and then maybe the video one is very rare, like Gary Tan from, he's doing YouTube stuff, but back then, he did Postgres, so it was its own little blogging platform. But to me, I think that no matter where you live, and Miami has such great areas for content production, produce content, share your opinion, and then get on a plane and go to the other pockets. Go to the Bostons, go to San Francisco, go to New York, go to Austin, build those relationships and invest in them. After I built 2 companies in the Valley and then exited them, moved back to Canada. And when I was building the next company, I decided every 7 weeks to go on essentially a 5-city road trip. And it was for a week. And I would go to New York, then I'd go to, sometimes Austin, then San Francisco, then Vancouver, Toronto, back home. And I did that because that is what I felt like. Once every 2 months, if you show up 6 times a year, people feel like you're there, right? You can literally live wherever you want. You can live in Timbuktu, you can live in Alaska. Yeah, just go, what are the big events? When are the massive, like, your relevant events? Go to those all the time, organize dinners, do podcast interviews. I mean, this is having a platform is such a beautiful thing to create.
Right.
And then that way you can physically live where you want, and you're going to bring the talent and the capital to you as long as you have reach and reputation.
Amazing. That's really, really powerful. So, hey, Dan, thank you so much for being here.
It's a pleasure.
For anybody that wants to get in touch with you, what's the best way to do that? Where can they find it?
Yes. Instagram. Instagram is my favorite. I'm Dan Martell, 2 L's of Martell on all platforms. The book's buybackyourtime.com. But hit me up on Instagram. If anybody wants, like, I have a internal SOP for my assistant. It's like 17 pages Google Doc. I'll send them a link. Just message me on Instagram. Just follow me first as a kind of a little, you follow, I'll send you the thing.
Wonderful. Well, buy back your time. Check it out now. Thanks again to the Hub at Office Logic for hosting us. They have an amazing studio here and co-working space. If you're a founder in Miami, you got to be here. You got to be networking. And until next time, I'll talk to you later.
Oh.